Hi, friends. This is The Skinny on Wall Street with us, the Wall Street Skinny. I'm Kristen.
And I'm Jen.
And this is our second weekly podcast episode where we get into interesting things happening in the markets, catch you up on deals, or anything that we happen to think is topical. And so today we're going to be tying together a couple of things that we really love, which keeps coming back around. So for those of you who didn't listen to our podcast the last couple of weeks, we did deep dive into Succession season 3. And again, I feel like the universe loves us. So they've given us a gift, and the whole Paramount saga has officially happened. Like the deal that was initially, we talked about it a couple of months back and I'll get into all the details, but there's all this drama about it. It is so Succession heavy. It's the same plot as Succession. It was dead. Anyway, it is now back on. There is the deal has happened. It is live. So we're going to get into some of the details because it is kind of an interesting and funky structure. But the other stuff that we're going to get into is our good friend Moshe. If you guys don't follow him, he's over at Mo News. He had posted something, I guess it was yesterday, because there is a law that they're trying to pass to prevent insider trading basically within Congress. Congress basically.
By the way, the fact that a law needs to be passed to change this, to now prevent insider trading within Congress, is absolutely wild in the first place. But continue.
There was something where it was some guy made $9 million and was fined $600 for their disclosure. Which, by the way, so here's the thing: in Congress, they have all this inside information. They're getting briefed on, COVID happening or AI stuff. They're making the laws.
They're making the laws that may or may not favor certain industries. I know.
So we're just going to touch a little bit on that because it's kind of wild. And was there anything that you wanted to touch on, Jen?
No, this is all you. I'm going to be totally lazy today. You saw me just stuffing my face. I'm going to take a nap while you talk. No, this is educate me. I'm actually really excited. And sorry, I'm sitting in a bed.
No, you're fine. One thing I did want to touch on quickly too, because this is, I feel all anyone is talking about right now.
All anyone is talking about. That's the classic gossip thing. It's all anyone is talking about is Kim Kardashian's new ear piercing.
No. But I mean, obviously, the debate performance in But we didn't actually highlight how wild. So again, in season 3 of Succession, they literally were talking about trying to get the president of the United States not to run for a second term. Started, in the media, talking about, a neurological condition, and then they ultimately force him out, and they then have to choose another candidate leading up to the convention. So it was sort of literally art. No. It's does art imitate life?
Life imitates art, imitates life. Yeah. And truth is stranger than fiction. I mean, we'd say you can't make this stuff up, but the writers of Succession kind of did make it up.
Yeah. So we've talked a little bit about this in the past. So I do want to catch people up on just what is going on with this deal. So you have Skydance, which is owned by, or I should say, David Ellison is the CEO. He is the son of Larry Ellison, who is Oracle, one of the Oracle founders. Okay, cool. And I should add, he was one of the producers of Mission Impossible, Top Gun Maverick. He's very much.
I love Mission Impossible.
Yeah, and by the way, I think it was Mission Impossible, but he's done a ton of these movies. He's very much in this arena, and so he had been eyeing Paramount. So Paramount is this dying. Well, I don't want to say dying, but it's a legacy media company that is in decline. So again, this is why I'm this is Succession. It's wild,
propped up entirely by Yellowstone. That's the only thing on the Paramount network that I watched or ever will watch.
Well, they do have Comedy Central. They own MTV.
But I don't watch that.
They have a lot of assets.
MTV. I think I'm the last person who watched MTV, and that was 10 years ago.
Well, what's interesting, and this is also, again, back to the whole Succession theme, which is that, narrative, I shout out to The Town, which is another really great podcast that, again, it gets into just media and everything kind of going on. They actually did an interview with David Ellison, but they were talking about how it's there is this narrative that David Ellison and his tech prowess, right, since he is the son of Larry Ellison, who, by the way, essentially was contributing $6 billion to the deal, which is
Oracle was, or Larry?
No. Larry Ellison. So again, we're going to get into the actual structure of the deal.
Also, does anyone name their kids Larry anymore? Because you don't see too many young Larrys running around.
Does anyone name their kids Jennifer or Kristen?
Jennifer's going to make a comeback.
It's going to be, well, it will, but it's going to be the old, we're going to be the old names. It's
I am already the old name. It already happened.
the Ruth and the whatever.
Myrtle.
But like my mom is a Fran, and apparently Fran is having a comeback. Francis. People are naming their kid Francis.
I can see that. Well,
dad.
And Franny is such a cute nickname. I love Franny as a name.
And then there's my dad is Ronald. So I don't know that
I don't know if Ronald's going to make a comeback.
I don't think so.
Shout out to our dear friend Ron Biscardi. We're not hating on your name.
Oh, sorry, Ron. It's funny.
We love all the Rons out there.
Yes. It's like in my head, I never think like Ronald, thinking that's how my dad goes by Ron. But anyway, sorry, we're totally off topic. We love you, Ron. And we love you, Dad Ron. We love all Rons. Anyway.
Much love if your name is Ron.
Sorry for any Rons out there. There's also Ron Weasley from Harry Potter, which
oh yeah, that's right. Oh, maybe it'll make
good Ron.
Yeah.
But no. So the idea though is that you have back to this narrative. So we have David Ellison, right? And again, this idea that he is now connected with tech and going to bring this almost like Silicon Valley touch to the assets, which legitimately is the plot of Succession, right?
Yeah.
It is that there's this legacy media company with Waystar Royco, and you have this tech company, Gojo, who is going to buy it. And then now they have this streaming platform, blah, blah, blah. Apparently they were talking about how like the interface at Paramount is awful, which again is in the Succession thing. They were talking about how they were peeing on the app because their app sucked with Waystar. But anyway, so Paramount, I guess, like hasn't been willing to invest in like algorithms and stuff and all that. So the idea is that essentially this is the same goddamn fucking. Sorry, let me pull this.
You're fine. We have an explicit rating, but yeah, you were throwing all the curse words that we usually get in one episode into one sentence. You were really excited. Yeah.
So, all right, I do want to talk a little bit about the actual deal itself because it is a slightly complicated transaction. So the other thing I did want to point out though is that look, this deal, well, technically has been accepted, like it's press release official, all that kind of fun stuff. There is a 45-day, what's called a go shop period. So there are other buyers out there who are looking potentially at this as a potential target. Like they are looking at Paramount. And so you still have, right? You initially had these other bidders. You had Apollo who wanted to team up. I think it was with Sony. There's some other like billionaires who are interested in buying these assets, right? Controlling
So they're engaged, but they haven't yet gotten married. Well, should a better suitor come along, they could potentially blow up the deal. Got it. Understood.
Yes. But there is a $400 million breakup fee. Since we've talked about breakup fees before, there is a $400 million breakup fee.
And what's the total size of the deal? Because I was having a hard time wrapping my head around this when we were talking about Succession.
Okay, so the total size of the deal, this is why it's a little complicated. So I'm going to back us up. So the history here, right? We have Sherry Redstone, who part of the sort of Redstone empire. And she owns a company or a holding company called National Amusements. And basically National Amusements in this transaction is valued at $2.4 billion. That's their enterprise value, made up of $1.75 billion of equity value. And then the rest is essentially debt. But you have National Amusements, which again is this $2.4 billion valuation for their enterprise value. And they own a bunch of movie theaters. And then they have a 77% controlling stake in Paramount. So that's the thing, right? Whoever buys National Amusements now becomes the controlling shareholder of Paramount.
Roger.
So that was sort of, yes. Okay. So there's, again, a few parts to this whole transaction. So part one is that Skydance, so that's the David Ellison, is buying National Amusements for that enterprise value of $2.4 billion. Now, because they're doing that, they are getting control of Paramount.
Yep.
Okay. Sherry Redstone, again, only owns 10% of the Paramount stock. But again, there were those two classes of shares. There was Class A shares that had voting rights, and she had 77% controlling stake of that. And then there was the Class B shares. And so this is where there was all that drama because what she wanted was maybe not what was beneficial for the rest of the shareholders. So there's a whole bunch of drama. Ultimately, they got it so that I think people are happy. Okay, part two. Once Skydance buys National Amusements and has control, Paramount then acquires Skydance.
Yeah.
So now, because again, Skydance owns National Amusement, so this will give Skydance shares of Paramount. And in this phase, basically Skydance is being valued at $4.75 billion. And so Skydance is also going to get paid in non-voting Paramount stock, which is essentially the shares are at $15 a share. So it's not part of the sort of part one. This is part two, where it's again, it's a little weird. Then in part three, Skydance investors, and so this is where Larry Ellison comes in, will contribute another $6 billion of cash to buy Paramount shares. And so the $6 billion in cash.
Can I ask one really dumb question about the cash? Sorry, when you talk about people buying stuff with cash in deals, usually that's code for debt. but is this actually just like cash that Larry Ellison has like lying in a bank account somewhere? Got it. Okay. So that's just a distinction to make for our non-investment bankers out there who, when you hear cash, you're like, I've been trained to think one thing and I think another, right? This is mattress money.
Well, this is where things I think get really confusing when you're talking in M&A versus talking more in like investing private equity, because when you're talking about, you have investors who are putting in cash. They're putting in cash, but that's equity, not financed with debt. That's actually like their cash. It's an investment. Right. But what I do want to make the point at is you can think of where this cash is going as, we spoke about this in the IPO episode. There's like primary versus secondary proceeds.
Yes.
So of this $6 billion, it breaks down to $1.5 billion is going to the company. So this is primary shares. So the $1.5 billion goes directly to Paramount. They can do things with this, like pay down their debt, right? For general corporate purposes. This is almost like going out to the market and raising new shares that they are issuing into the market. But again, it is for them. It is for Paramount. It is not for shareholders cashing out. The remaining $4.5 billion is going to almost like the secondary shares, right? So it is going to Paramount shareholders. So all of the voting shares are being taken out. Regardless, at the end of this transaction, Skydance is going to have 100% of the voting stock.
Okay, that's the important piece, right? So we're neutralizing Sherry. So Sherry was obviously like the big fly in the ointment, right?
Well, and Sherry so because of the controlling Class A shares,
right, so because of the voting shares, right? Exactly.
So Skydance basically is investing $8 billion in Paramount. And again, that values National Amusements at $2.4 billion. But a few just interesting tidbits. So the Class B shareholders, those are the non-voting shares, they can theoretically cash out at $15 per share. Their shares were trading at $11 a share. Voting stock can cash out for $23 a share. So they are being cashed out at different prices. The other thing, which again, I thought was interesting, again, in light of Succession, and I'm going to just give a warning for spoilers. So Jen and I are in the process of trying to do season 4. Jen has a little problem being able to watch on her. So
I can't watch it right now, but I'll watch it. Yes. I'll watch it like a day. It'll be fine.
Once we get Jen to watch it. But what happens, and again, I'm sorry if you haven't seen it and you're planning, spoiler, you've been now given enough freaking warning. But in season 4, we're going to get into it. Fast forward, whatever. Logan dies. So the kids take over as interim CEO. And it's funny because there's only 2 of the kids, right? It's Roman and it's Kendall who take over. And Shiv wants to. And they're like, no, we can't do that because no one's going to buy 3 CEOs. Guess what? Paramount has 3 CEOs.
Oh, I didn't know that's where you were going with this. That's really cool. Yeah.
That's another parallel with Succession. So the point of this is just there's so many parallels, and it's so funny. The deal is wild. Hopefully my explanation made a little bit of sense. It does get very complicated, but the main takeaway is it's basically Succession, but playing out in real life. And I don't know. I'm here for it. I've been watching and reading all the stuff about it. I think it's very interesting and very cool. And yeah. So
my main concern is, what does this mean for the last season of Yellowstone? So if someone could please find out. Okay, good. No, that's great. That's great.
I mean, look, you have someone who is very artistic, who wants to, continue. They want to do what's right with the assets, the IP, the brand. So
okay,
that was the whole thing. People wanted this because it was better than like selling to Apollo, right? And selling things for parts. You have someone who's literally in the Hollywood community, like is doing these movies and like, so I think people see this as a very good outcome.
Oh, good. Yay.
Someone doesn't swoop in and pick it up. Then you might be in trouble.
Okay. Right.
So really quickly, the other thing we wanted to chat about was just the congressional rule and the current rules, which to me is wild because as the wife of someone who works at a hedge fund, I get in trouble if I literally got in trouble for opening up a freaking account so I could put money in cash, like a high yield cash account. So I'm just putting it out there. And yet Congress is allowed to get this inside information and they don't it's legal. The problem is that what congressional person is going to want to police themselves? They are trying. And so I'm going to pull this up again. Love Moshe, another plug for him because I'm stealing his little thing where he was sharing the, I guess, the information about a deal. But basically there was bipartisan support for a new law that would prevent lawmakers from profiting off of insider knowledge. So there was John Ossoff, a Democrat from Georgia, Gary Peters, a Democrat from Michigan, Josh Hawley, who's a Republican. Anyway, so it's bipartisan. And they want to basically limit the ability of any member of Congress, their spouse, their children, president, vice president, from purchasing and selling stocks while in office. Again, to me, this makes complete sense.
It makes complete sense, and it's so logical. And what I think will really hammer this home for anyone who's not familiar with this, if you have that up on your phone, could you share what the top returns were for the top three investors in the U.S. government relative to the total return from the S&P 500 last year? Because I think that'll really illustrate how outsized their returns on their investments are thanks to this insider knowledge.
Yes. Okay. So number one was Brian Higgins, and he, in 2023, his return for the year was 238.9%. So he more than doubled his money, which is wild.
That is
by the way.
So insane.
Let me put this in context. The S&P was up 23%, which was, again, phenomenal. The
and the average annual S&P return over the last 30 years. 10%. Yeah, exactly. 10%. So that was a huge banner year for stocks last year. And this guy makes that look like chump change.
But no. There's at least 25 to 30 people who beat the S&P last year, but beat it
by such a huge margin.
Mark Green,
smoked
Eric Graves, 122%, 127%. I know everyone likes to, talk about Nancy Pelosi. She was at 65%, but she's actually 10th down on the list, which is wild. She wasn't even number one. Everyone.
Get your act together, Nancy.
Yeah, seriously.
If anything, it's shocking. It's shocking when their returns are at 230%. It's did you not even know how to correctly trade off your inside info? Are you not even competent at that?
But no, and the current law, and this is also something that I thought was wild, is they tried to put a little bit of guardrails, but basically right now I think it's a $200 fine for not disclosing properly. So you're cool, I just made $9 million, but yeah, here's $200 for
here's $200.
Slap on the wrist.
Thanks, but no
this is
thanks.
A slight nuisance. It's less than the fees they're probably paying to execute these trades.
My real estate company charges me $150 a trade processing fee for when I close a real estate transaction. And I think that it's nothing.
Yeah. So anyway, and again, actually, for those of you who I don't think we ever did any, I think one of the things we should do is we should do a deep dive on the book, The Man Who Beat the Market, about Rentec and everything at some point, because it's just such a wild story. But the point is that you have the best the best hedge fund ever is Rentec, right? This group of these super ridiculously smart math PhDs who, by the way, probably are doing machine learning. They probably built an AI to use all the data from the stock market to essentially predict what's going to happen. It's all whatever, but
they're the OG quant fund.
They're the OG quant fund. Again, I feel like they probably figured out AI before anybody else did, but their return was something 66% annualized for a number of years. And again, you have all these senators that are beating Rentec. No. That's what inside information is. So anyway, that was fun. So anything else, Jen, before we sign off?
No, I'm joking. I came up with such a good segue that I was so excited that I choked on it. So when you said, I was about to say, it's like robbing a bank. And that's a segue into our episode for Saturday, where we're going to be interviewing actually one of my neighbors in Charlotte, whose firm is in charge of effectively robbing banks to teach them a lesson. So it's about red teaming and about bank fraud and all these things. So it's a really cool episode. I think you guys will enjoy it. It's a short one. It's quick. It's fun. Local dudes and gals and just really cool people. And it'll be a good one.
Awesome. Well, thanks guys. And we will see you next time. Bye.
Bye.